Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 19th of April, 2017. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Are we risk on, risk off this morning? The market stance this morning, money is moving into equities. The Nasdaq leading the pack up 23 and a half points, 23 and a half points, followed by the Russell up 5.2 points or 0.38%. The Nasdaq's up 0.43%, and then comes the S&P up 7.5 points. The laggard this morning is gold, trading at $1,287.50, down $6.60 or 0.51%, followed by the yen, the U.S. bonds, the euro bond, the 10-year. So clearly, money is moving into risk assets. The news flow overnight. One of the key things that has occurred over the last couple of days, the market sees 43.7% chance that the Fed will hike rates in June. This is down from 66.5% from last week, 66.5 to 43.7 based on the Fed funds rates. Fed funds futures. Also this morning, the euro area reported on inflation. Inflation came in at 1.5% in March, down from 2% in February. Transport fuels were the biggest gainer, and telecom and package holidays were the losers. The pound is holding on to its gains from yesterday following the announcement by Prime Minister Theresa May regarding the June 8th snap election. Yahoo reported it beat its expectations. It earned 18 cents a share on revenue of 833.8 million. Also, IBM reported revenues fall for the 20th straight quarter. Total revenue fell 2.8% to 18.16 billion for the first quarter. Got to keep an eye on those earnings. Looking at what has happened this morning, also, we got Morgan Stanley reporting a beat. They show record profits from trading revenue. They reported $1 per share versus 90 cents expected, 9.75 billion versus 9.1 billion. That's a big one there. Other than that, there really isn't much more to report as far as what's coming up during the session. We have 10:30 Eastern, the DOE U.S. crude oil inventory is expecting a draw of 1.7 million. Distillate inventory is expecting a draw of 1 million, and gasoline inventory is expecting a draw of 2 million. Other than that, we have at 10:30 ECB Speaker Prate. At noon, we have Fed Speaker Rosengren. And then at 2 o'clock Eastern, we're looking for the the U.S. Federal Reserve beige book release. That has been a mover lately, so pay attention to that. 2 o'clock this afternoon Eastern U.S. time. Let's, as always, you may have noticed that our routine is pretty steady, repetitive, maybe even boring, and that's how it needs to be. Here's what was expected yesterday on a primary hypothesis. The expectation was for a push up into the MC point of control and the 44 area from the prior day, expecting initial resistance at 40, 75, 41 up till 44, and then we're looking for a what looks like a head and shoulders formation, a failure in this area. I'm looking for sellers to respond back and sell it back through the opening swing down here to push through the overnight low, as you see here. This was the primary hypothesis. The reasoning behind this is, well, I covered it. You can watch it. These YouTube videos are done pre-market and stay on. They're unedited, except yesterday I had to annotate one of them because I said that the Bank of Canada announced earnings when I meant to say Bank of America. Bank of Canada does not announce earnings, it's a central bank. So I apologize for that, and I did annotate yesterday's video to correct that. I saw the symbol BAC, and I don't know why I said Bank of Canada. I think I was half asleep yesterday. So other than that, these videos are unedited. You can go back and look at what was expected versus what happened. It's very transparent. And here it is, a push up and then looking for a rotation lower. The secondary hypothesis is for the market to continue the prior day's move. Now, remember, the prior day's move occurred on a pretty light volume, smaller traders participating mostly. Uh, the expectation from yesterday is for an initial push to that 41 area, a small pullback, and a continuation for the market to push up into the next key area above of 53. This is what I expect the market to be primed for over the next few days. I expect it to continue higher through the next few days. Here's what actually happened. Let's minimize this. This is yesterday's. So there it is. It's an open auction right there. The market pushes up, pushes through the 41 to 41.75, small pullback, and then continues to 44.50, 44.50, and then you get this. So if we draw this the same as what we have in the hypo, you have a move up, pullback, push, pull, retry, that's the right shoulder, and then the move down. It consolidated here around the mid, but ultimately we got the move down through the overnight low, which was around here. This is where hypo one kind of finishes its process. And then in the afternoon we got buyers stepping in. Pretty good taper on yesterday's profile as the market moved down. This was an exhaustive move down, an exhaustive impulse down, and the market just walked back up and held and finished basically right in the middle of the range. You notice that the profile is very odd shaped. Again, we've been getting odd shaped profiles for the last few days. There's activity from both sides, and that's what causes that. There's a lack of consensus as to where value is, and the buyers are currently holding prices at bay. And that's where we ended up. So we end up with this weird looking profile with value right in the middle. You would call this Gaussian, but it's just very odd how it just shuts off below 36. The trading shuts off, and the bulk of it happened around 38 till 41, and that becomes our value area for today. The overnight high is 46.50. The overnight low is 36 and a quarter. The market did not make any attempts to go lower. Let's look at the overnight session, and then that'll walk us into the current session's expectations. Here's the overnight. The market closes at 37.75, reopens at 37.50, explores downwards down to 36 and a quarter, and then it's all upwards from there. Essentially, where we are now at 23.45 is where we left off on Monday, the holiday, with that weird point of control up top. We are back there. Remember, this is a weak high. I mentioned this yesterday. This is a weak high, and it's likely to be taken out. I expect the overnight high to be weak this morning and to be taken out fairly early. Overnight inventory is long, almost completely long in price and in volume. So there's likely to be a pullback, in the first few minutes or so, first 15 minutes or so, as the overnight inventory balances are likely to balance. Look at what we did yesterday. So as we look at the profile here, you'll see that yesterday's trading Yesterday's trading was inside of the prior day's trading. We didn't accomplish very much yesterday. Notice the point of control, the black line, is right in line with the prior day's point of control. The market could not push through and push lower. This is very likely to push up. 53 is the target to the upside, the first target to the upside. This is a market that has moved lower right here, has continued the move lower and has consolidated and is likely to go into a correction like we see in intraday, except this is happening over several days. And so this looks pretty bullish to me from where it stands right here. So keep an eye on that. Okay. Let's look at what we're expecting for today, just to make this as short as possible. This chart here looks noisy, but it is not. The reason there are so many lines on here and it just looks like a mess, like spaghetti, and I do hate spaghetti charts. The reason it looks like a mess is because we've been trading in the same range for some time. We're inside of this consolidation, so let's move this micro composite profile forward to see where we are. Yesterday we did test that 43 even MC point of control. We pushed through to 44.50 and then we dropped off to put in a higher low to the prior day, which put in a higher low to the day before that, and it's likely to continue higher. We did leave the close with a double top at 41 and a quarter. So you see the point of control shifting down. So as we include yesterday's volume here, that black line, this black line right here, this black line is the point of control. And that block line, as we move forward, starts to drop as volume accumulates lower. So you can see the volume starting to fill up right there. It's filling up around the 37 area. And there's your shift to 23.37.75, the point of control. And then it moves to 23.39, and then it holds steady at 23.38 and a quarter. 23.30, yeah, 23.38 and a quarter is now the point of control. The point of control for the micro composite in this area is now below us. It's below us, and this is likely to act as an area of support on an initial test. So any push, any responsive buying into this area is likely to be tangled and likely to be bought on an initial test, right? This is what the auction is telling us. My goal is not to, of course, in order to make money, we have to create a bias or a prediction based on the context we have, and then place a bet based on that prediction. But my goal here is not to be right. There's a difference in those two ideas. So here we are, opening right on the edge of yesterday's high. We're likely to drop in a little bit. The expectation is for an open auction. I'm not seeing any key imbalances here. I'm looking for a responsive selling. Look for a push to 40, and then I'm looking for a base for it to sit sideways, and then for the market to ultimately start pushing up. If we get down to 41, the distance to 53 becomes 12 points. That's well within the day's range. So this becomes our target up here with a response between 41 and a quarter and 40 to the buy side. That is hypo 1. Okay, let's see if we can get a good circle. No, we cannot. Come on. Nope. All right, a square. So that's the primary hypothesis for today. The better trade, not the more likely trade, that hypo 1 is the most likely play from an auction perspective. The hypo 1 answers the question, answers the ultimate question, which follows three questions. The three questions are: what is the auction doing? Trying to do? How good of a job is it doing? What is it likely to do from here, right? What's the most likely play from where we are now? And hypo 1 is the answer to that question. Hypo 2 is, however, the better trade. The better trade is for the market to immediately continue to move up. So open auction, move up, start to dig into this low volume node on the composite, find failure, and then start to move down into the 38 for a little bounce, and then give us a couple of impulsive rotations down to take advantage of on the pullback. That's hypo 2 right there. In other words, hypo 2 is a failure by the buyers to hold prices higher, and then sellers step in as the market fails to push through this 3-day high that we've got at 45, 46, that area, and then the market becomes responsive again and moves back into balance with the point of control at 38.50 or so. Okay, so those are the two main ideas. Now remember, today at 4:30 Eastern, there's an AMA with Futures IO. It's a public AMA. I do these maybe once a quarter. If you have questions about anything that I talk about or anything relating to trading, join us. The invitation for that, the registration link is inside of the description of the YouTube video. Just find the description in this video and click on the link. It's right near the top to join. And it starts at 4:30. So if you want to join, it's time to register. Good luck today, and I'll catch you this afternoon. Take care.